Well, this is the latest threat to the global banking system. If you've been watching this program, you know that the global banking system is already in a lot of trouble. And we've talked about the problem it's facing before, but now it's gotten even worse. So today we're going to talk about what that threat is, just how bad the situation is, and how it all relates to Bible prophecy. Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. So what am I talking about that is this threat to the global banking system? Well, let's start right here with this tweet from Porter Stansberry. He says, the federal government owns 370 million square feet of office space nationwide, nearly as much as is in all of Manhattan. However, according to the General Services Administration, no major government agency occupies more than 50% of its allotted space. Think of just the inefficiencies, the bureaucracy. That's unbelievable. Can you imagine a business leasing 50%, twice as much space as they need? And that's no government agency occupies more than 50% of its allotted space. Some it's as little as, I think, 12%. I was reading. It says, as a result, President Trump wants to sell 2/3 of these buildings. Given that office values have already declined by 30% on average over the past several years, these sales could further pressure commercial real estate prices and also hurt small banks, which issued roughly 70% of the loans for these properties. And he's absolutely right. We talked in the past about the problems that the commercial real estate downturn has created for regional banks, small banks in particular, but this just will exacerbate that problem. Let's see why. Well, we have this from MSN. It's actually from the Wall Street Journal, reprinted by MSN, but it says the U.S. government has a landlord and Trump isn't a fan. So part of the DOGE, the Department of Government Efficiency, is going to be to get rid of these inefficiencies, this waste in government, where you lease twice as much space as you actually use. It doesn't make any sense. But given the timing of when this could happen, this could have huge impacts on the banking system. So this says, the General Services Administration, the federal agency that owns, manages, and leases much of the government's real estate, had previously awarded Trump the rights to redevelop the government-owned Old Post Office as a luxury hotel. The GSA selected him over Hilton, Marriott International, and other big-name operators. Just before cutting the ribbon on the hotel's opening day, Trump took a moment to praise the agency. The GSA people are amazing professionals, he said. Since then, Trump has soured on the GSA. That change of heart could soon accelerate a shakeup already underway in the federal government's real estate portfolio. The GSA manages a massive portfolio of federal buildings consisting of 370 million square feet nationwide, but many have been poorly maintained due to lack of funding and are sitting empty or underused, the GSA testified before Congress in 2023. The Trump administration is considering selling 2/3 of the federal government's office stock to the private sector, according to people familiar with transition operations. So to put that in perspective, I looked this up. There's estimated to be about 11.2 billion square feet of commercial real estate office space in the United States. So to sell 2/3 of that would be 247 million square feet, or the equivalent of 2.2% of all the office space available in the United States. So to put that in perspective, as of right now, about 1% of all the single-family homes in the United States are up for sale. What would happen to prices if all of a sudden the number of single-family homes available on the market going up for sale tripled overnight? That's what we're talking about with the sale of over 2% of all the commercial office space available. If the Trump administration moves forward with these plans. I have no reason to believe that they won't. They absolutely should. This needs to be done. It's wasteful. But what impact will that have on the market for commercial real estate, especially when we've already talked about things such as this? We looked at this tweet from back in August. We looked at several tweets very similar to this. It says, wow, 345,000 square foot office tower in Baltimore sold for $4 million. And we saw one in Manhattan that 18 years earlier had sold for, I forget what it was, $250 million, and then it sold for $8. Whatever it was a 97% discount to the value it sold for 18 years earlier. So we're seeing across the board this collapse in prices for commercial real estate, anywhere from 30 to 50% on average declines, with some that are even worse than that, depending on where the location is, the age of the building, the cost to operate it. What are the vacancy rates? So we've seen vacancy rates skyrocket for these buildings as more work from home takes place. We've seen the inability of those who own these buildings to be able to cash flow these buildings because the tenants aren't in there. The operating costs have increased with inflation. And then they have to refinance these buildings because 87% of all commercial real estate is financed using 5-year interest-only loans. So I want you to think about that for a moment. We learned all about the interest-only loans related to home mortgages back during the Great Financial Crisis and the problems that caused. But think of these firms, these companies that purchased these properties or refinanced these properties 5 years ago at 3%, 2%, whatever the rates were at that time. And now they're going to have to refinance these at much higher rates, double or more what they financed for the previous time on buildings that already do not provide them with a profit. They aren't cash flow positive. What's happening is these developers, these owners of these buildings are simply walking away from the building. They're saying, well, under the terms of my loan, I can walk away from this. Yeah, I'll lose whatever initial down payment I put in, but I'm not willing to put up more cash. I'm not willing to continue to hold this building that's losing me money, so I'm just going to give it back to the bank. And guys, we've been over this before as well. This is from Market Watch a few months ago. It says market bracing for $1 trillion bill on commercial real estate coming due through 2025. More than $1 trillion of commercial real estate mortgage debt will need to be refinanced through 2025. That's nearly 20%, or 1/5, because again, these properties every 5 years, that's nearly 20% of all outstanding U.S. commercial mortgage loans. The Federal Reserve's pivot to interest rate cuts in September stoked optimism about commercial real estate and helped improve financial conditions, did it? But a host of issues, including remote work, still high interest rates, and a slowing economy, add to the risk associated with refinancing these properties. The 10-year Treasury yield, and that's important because that's often the benchmark that sets the interest rate that's charged on these mortgages, on these commercial mortgage loans, was at 4.1% on Thursday. Again, this is from 3 months ago. Has surged almost half a percentage point, or 50 basis points, above its one-year low set in mid-September. So right before the Fed cut rates, rates were about 3.6% on the 10-year. By the time this article was written, they had surged to 4.1. Here's where they are today, as of the recording of this video, 4.5. So interest rates have actually gone up since they wrote this. And guys, that is not good for the banking system, especially when you had the Trump administration saying, you know what, this is wasteful to have twice as much office space as you need, more than twice as much office space as you need. We need to sell this. The government needs to get out of this. Stop wasting this taxpayer cash. That's going to put further pressure on prices in the open market. And as we also noted before, as we read back in June from Florida Atlantic University, it says more banks at risk of failure as commercial real estate loans reprice. And guys, this hasn't changed. Things haven't gotten better in the last 7 months since this came out. It says more than 60 of the largest banks in the country are at increased risk of failure due to their commercial real estate exposure, according to data analysis from a finance expert at Florida Atlantic University. 67 banks have exposure to commercial real estate greater than 300% of their total equity, as reported in their first quarter 2024 regulatory data, and is shown by the U.S. Bank's exposure to risk from commercial real estate screener. Now, why is that important? It says bank regulators view any ratio over 300% as excess exposure to commercial real estate, which puts the bank at greater risk of failure. So this is a metric that's proved over time to be more risky, a greater risk to banks if they exceed this 300% ratio. And as it says here, 60 of the largest banks, 67, have that exposure of 300% or greater. But there's more than that, because it tells us here among banks of any size. So that's just among the big banks. Among banks of any size, 1,871 have total commercial real estate exposures greater than 300%. And of those, over 1,000 are greater than 400%. Over 500 are greater than 500%. And 243 banks in the United States have over 600%. So twice as bad as what puts the bank at greater risk of failure. So guys, as the Trump administration sells off this office space that GSA currently holds, it's going to further put pressure on prices in the free market. We're going to see more and more developers and owner-operators walking away from these properties, just turning them over to the banks. And again, I'll put a link to this if you want to check and see if your bank may be on the list. But this is the Florida Atlantic University screener that they referenced that has a list of many of these big banks. I don't think it has all of the banks, the thousands of banks that were listed, but of the big banks, here it is. Here's the top 25. You can go and look at on down the list. You can sort this by name, because there are many of these banks are going to find themselves in a lot of trouble as a result of this commercial real estate crisis. And this brings us full circle back to Porter Stansberry and another tweet he put out. He said, quote, banks have now seen 12 straight quarters of unrealized losses, the longest streak since the 2008 financial crisis. We talked about this over and over now for 2 years. Look at these unrealized losses in U.S. banks. For perspective, this little blip over here is the great financial crisis. That little tiny blip that barely shows up. This is now. This will not end well. He says to everyone who says these losses don't count, that they're on held to maturity bonds, that's only true until there's a run on the banks, as there should be as inflation ticks higher and the banks can't afford to pay market rates of interest. Now, I don't know how much further inflation will tick higher in this environment, because we're heading into a severe deflation, much like we saw during the Great Depression. But it's true that there will most likely I would say highly likely be a run on banks. And there should be a run on banks, not because inflation is ticking higher and the bank isn't paying you enough interest, but because the entire banking system is bankrupt, right? And why would you say, well, let me put everything with this bank, and just see what happens, right? Especially for those who have above the FDIC insured limit, which, again, many people watching this would say, well, I don't have more than $250,000 in the bank. Yes, but maybe your employer does, or your neighbor's employer. Lots of businesses have way more than $250,000 at the bank. Now, when we had the bank runs and the banking crisis back in the spring of 2023, Janet Yellen, Jerome Powell, Joe Biden, they got together and they said, well, we're going to guarantee all of the deposits at these failing banks. That prevented bank runs from occurring at that time, from that crisis spreading across the globe. However, there will come a time when they have larger bank failures that they don't see as a systemic risk, and they will not make those guarantees. And when that happens, that's when you'll see panic. That's when you'll see bank runs spreading all across the globe. And guys, that is why this is significant and important from the perspective of Bible prophecy. Because guys, this system we have now, it's a Ponzi scheme. It's a house of cards built on a foundation of lies. It's going to be coming down. We may be seeing that already. We've talked about the overvaluation in the U.S. stock market, and we saw yesterday huge sell-offs in two of the biggest stocks that we had talked about before, Broadcom and Nvidia, trading at astronomical valuations that made no mathematical sense whatsoever. They were both down almost 20% yesterday. We could be seeing the beginning of a crash in the U.S. markets, in the stock market. If that's the case, coupled with these problems we see in the banking system, we could be looking at the end of the current monetary system. Again, I've been talking about the greatest financial crisis in the history of the world, as severe as the Great Depression, is coming upon us. I don't think it'll last as long in duration. It's not going to last 10 years, but it's going to be very severe. It's going to come very suddenly because things travel at the speed of social media now. And so once runs on banks occur, people don't have to stand in line in the rain, and the bank doesn't get to close the doors at 5 p.m. People simply hop on their smartphone and transfer from one bank to another. Or they can go to ATMs any time of day and take that cash out. So there's all sorts of problems we face today that we did not face during the Great Depression. Guys, I think this is going to be a severe crisis, so we need to be prepared for that. We've talked about how to be prepared for that. But ultimately, we need to be spiritually prepared for that, because I believe that this crisis sets the stage for the rollout of the new system they've been preparing, a system that includes central bank digital currencies, tokenized assets, and digital IDs. And that system is indistinguishable in capability and function from the Mark of the Beast system. It's not the Mark of the Beast system that we read about in Revelation chapter 13, verses 16 through 17. That won't occur until we're in the tribulation, the midpoint of the tribulation. We're not in the tribulation at all right now, as of this recording. But it sets the stage for that. We're seeing the foundation being put in place. We're seeing the infrastructure being put in place today for that Mark of the Beast system. And that's why this is important. It's why we should be paying attention to this. It's why you need to be paying attention to what's going on in the world and what's happening in the banking system. Again, I'll pin a link at the top of the comments to that bank screener. Check, make sure your bank's not on there. Remember, Ecclesiastes 11 verses 1 through 2 says, diversify, for you do not know what risk lie ahead. I would diversify no matter what bank I'm in, but if I had accounts at one of those banks, I would probably consider finding a new banking institution. Again, you don't want to panic, take everything out of the banks. That's not what we should do. That's not what the Bible is teaching. It's teaching to diversify. Don't have all your eggs in one basket. But guys, ultimately, again, this is a spiritual issue of preparation. We need to be prepared for what's coming ahead. Make sure that you know Jesus Christ, because when the storms of this world come, those who have built their lives upon the rock of Jesus Christ, the storms will not destroy them. Their house will still be standing. Make sure you're one of those people. Make sure you find yourself in a position to be able to help those around you and to encourage those around you, who many of whom will see their lives destroyed because they've built their life upon their 401k balance or their bank account balance. And when they see that go away, they're going to be crushed. But that's a perfect opportunity to share the good news of Jesus Christ with those people. So make sure you're preparing yourself mentally, spiritually, emotionally for the days ahead. Again, I don't know when all of this is going to happen, but the data tells us it will happen. And I think that we could be seeing this GSA sell-off of commercial inventory be one of the things that happens that helps facilitate this and push this to make it happen. So let me know what you think. Leave your comments below, and God willing, I will see you tomorrow.